you guys were talking about Paytm, but look at Zomato, right? Zomato is up another 5.5%. So basically, from yesterday's from the pre-tweet level of the founder talking about the focus on profitability, it's up 10%. So this is quite interesting. And we'll pull more on Zomato in a bit, get you more details, etc. Just an update in terms of what their stated objective in terms of when by when they want to get to profitability, etc. is. All right. Other than that, Adani Ports is up another 5.5%, as I think you guys have been saying. Adani Wilmar is up about 5%. Ambuja Cement is up 3%. It's basically Adani Enterprises, of course, is up 5.5%. These, by the way, are also the top volume traded gainers. So, when stocks go up and they are backed by volumes, or they go down and backed by volumes, I mean, always important to take note of that as compared to, stuff moving around with thin volumes. These are the names that I mentioned, the names which are moving up with decent sized volumes for this point in the day. Zomato is zooming, actually. It's up 7% now. So just to go back to the other one, which is doing very well. Paytm is up 7%, so that's doing very well, 630. Paytm, though, was up 10% yesterday. It lost about 5 by close. So, things did come off a little bit. Adani Green and Adani Power are the other names which are coming up in the mix in terms of stuff which is doing the best. SBI Life is up 1.75% amongst the life insurance stocks. I mean, I think SBI Life is the most liked amongst analysts, etc. I think you guys mentioned Wonderla, which is up 12%, 419. It's coming up with volumes, and that's the only reason I'm mentioning it. There is Adani Transmission, which is up about 3.5% as well. I don't see Adani Total Gas. Maybe that is the only one which perhaps is down, but otherwise it's more up than down for that group this morning, and that was the case yesterday as well. Adani Total Gas is still lower in trade. On the downside, apart from what we've already mentioned, maybe you could look at Astral. We, of course, reacting to earnings. We put details up earlier, 2.25% lower. Gland Pharma continues to sell off. It's down 2.5%, 12.74 on Gland Pharma. Indus Tower, of course, had a big day on the back of that Vodafone news a day ago. That is seeing some pullback, some profit taking as well. So 70 points and 17,792. The 20-day moving average for the Nifty comes in closer to 17,900, and I think that's the first stop the market needs to climb over, close above for the market to look ahead. Mahesh Patil is CIO at Aditya Birla Sun Life AMC. He's joining us now to take some questions. He's a market master of the day. Mahesh, great to have you with us here. Thank you very much. I want to start with earnings, Mahesh. How are you and your team looking at the earnings we have been getting in the third quarter so far? What I've noticed is there are no upgrades, any large upgrades. Earnings either are pat for FY24 and beyond, or there are cuts, and in some cases meaningful cuts. What are you guys looking at there?
Yeah, you're right. I think this quarter we have seen that the overall earnings have been kind of mixed. We have seen IT companies actually compared to expectations, they have actually done better in terms of margins. In fact, in one or two IT companies, we have seen some upgrades. But by and large, if you look at the Nifty earnings numbers which have come in till now, it's still a reasonable growth. We have seen a growth of almost 16-17%, which is not bad considering the fact that overall there has been slowdown in terms of exports, and domestically also there has been kind of a slowdown on the discretionary side. Consumer durables and other sectors have seen a marked slowdown after the festive season, and overall rural economy, which was supposed to pick up, is still gradually moving up. So on this backdrop, I would say that the growth numbers for the Nifty earnings is still fairly good. Good thing is that we haven't seen much on aggregate basis any downgrades. There are a few sectors where the downgrades have come in, stock specific, but by and large, we don't see any material risk to earnings for FY24, and that looks to be a fairly good outcome in a scenario where globally we have seen quite a few downgrades for this calendar year.
Okay, by the way, all of these startups and these new age tech companies, first it was of course Paytm, then it's Zomato, now Nykaa is also added to that list. It's up and about. PB Fintech is also moving up with up about almost about 3% odd. Mahesh, good morning. That's the theme, right, in the last few days, that perhaps these new age tech companies are all getting to profitability, and we've seen Paytm display that. Would you want to raise your allocation to any of these names that I mentioned?
So I think the new age tech companies have, you rightly said, they're focusing more on profitability. Earlier, it was more of growth. And considering the fact that markets, we've seen a good correction in some of these stocks here as well as globally. And focus is now back to profitability. And we've seen some of these companies cut down on their costs and to some extent sacrificing growth. Though I think in these companies, if the growth comes down materially, then the attractiveness of these companies goes down because investors looking at these companies are looking for the kind of high growth which they are reporting. But I think globally also we have seen in NASDAQ, a lot of the tech names have bounced back from the low. So the sentiment which had the correction which had happened in these stocks on the back of sharp correction in these new age technology stocks globally, that has to some extent arrested. And we are evaluating some of these names. We've initially after the IPO and the post-correction, we looked at some of these names and tried to really value them more now on profitability rather than the revenue multiple or the overall subscription base. So I think with profitability inside, it's now much easier to value them, say probably 3-4 years down the line on EBITDA multiple, and then look at a fair value. So yeah, I think some of these names which are now road to profitability and cash flows are generating free cash flows. Those companies clearly are on our radar, and we would evaluating them obviously now with a proper framework of valuation. And if it fits that, I think they can still be good compounders over a long term.
There are just few of them that are listed. Mahesh, do you want to name any of them?
I don't want to name any of these names, but I think clearly the factors what we're looking at in these companies is companies which have already established leadership. They have the competitive intensity in this space has pretty much been set. We're not seeing any new entrants coming in and trying to really get into a pricing war. And so these are the factors which, and we see still a large addressable market, okay, which will ensure that they will continue to grow at a fairly good rate over the next 10 to 15 years.
Okay, all right. Mahesh, I also want to ask you about the Adani Group. The last 10 days or so, they've been in news, and it's had an impact not just on the group, but on the markets as well. So two-part question. Some of the stocks have fallen considerably, whether it's in Ambuja Cements, in ACC, or even Adani Ports, which had good core business. But because suddenly a question mark came on the group, that's why the stocks corrected. Are some of them looking attractive? And the second factor is, can it have a larger impact on the markets on the whole, or has that mostly played out?
So I would not like to comment on individual Adani stocks. That would not be right. But I think overall, the correction post-budget we saw was largely due to the factor of Adani Group companies, where we saw significant price reaction over there and concerns about the overall debt repayments of the group. But I think if you look at looking at the numbers and the overall exposure which the banking system has to the group, I think it is something which is well within the limits. We don't see any major systemic problem. Also, the banks and others which are currently in this shape where the balance sheets are very strong. We are not seeing otherwise any large corporate stress. We are going through a very benign corporate credit cycle. And I think that should be able to contain any kind of contagion effect, okay, which possibly market was fearing. And we're seeing some of these companies also now trying to reduce the pledges. They have some amount of liquidity which they have used to repay some of the loans and reduce the pledges. So I think in that context, the whole concern, okay, which came in and we saw, I think to that extent, I think it is looking to be getting arrested. And I don't see that really having a larger implication on the market and the banking system in particular, because that was a sector which really took the brunt of this issue.
All right. Well, Mahesh, we leave it at that. Thanks a lot for joining in and have a great day. The market, it looks like it's having a good day so far. So the start has been well in the green. The Nifty is now very close to that 20-day moving average. So don't lose sight of that. 17,807.